Microsoft and Meta have both beaten earnings expectations, but their gains tell different AI stories, thus prompting contrasting investor response. Our Bo-kyoung explains.
Major hyperscalers Microsoft and Meta reported their fiscal fourth quarter 2026 results. That is for between April and June after market close on Wednesday. Both companies beat the market's revenue expectations, but differences in AI monetization and profitability triggered sharply contrasting market reactions. Microsoft reported revenue of $90 billion, up 18% from a year earlier, surpassing market expectations of $87 billion. Net income rose 31% on-year to $35.77 billion, while adjusted earnings per share, or EPS, came in at $4.74, beating the market forecast. Due to ballooning investment in AI infrastructure, free cash flow fell 23% on-year to $19.64 billion, but it exceeded Wall Street's estimate of a little more than $13 billion. Showing that the company's AI investments were indeed translating into profits. This was mainly driven by its cloud business, Azure, surpassing $100 billion in annual revenue for the first time, and the company's AI productivity tool, Microsoft 365 Copilot, which had more than 30 million subscribers. Meta, meanwhile, posted revenue of $60.80 billion, which slightly beat analysts' expectations of $60.22 billion. Yet both operating and net income fell after spending on AI infrastructure jumped more than 55% from a year earlier. Free cash flow plunged more than 90% on-year to $780 million as capital expenditures surged. This weakened investor sentiment, leading Meta shares to drop nearly 10% in after-hours trading.
Meta platforms faced pressure from below consensus revenue guidance and slower ad impression growth, while Microsoft rallied on stronger forward guidance, rapid growth in paid 365 Copilot users, and lower capital spending planned. These differences made two stock shares diverge.
When it comes to the outlook for South Korean chipmakers SK Hynix and Samsung Electronics, the expert says continued AI spending by major tech companies should support demand for semiconductors. The key question, however, is how long this momentum can be sustained. Bo-kyoung, Arirang News.